Start recording. Yeah. So, well, what I'm going to say is that for some time now, I have been, or we have been taking free training on how to trade the market, about the major rudiments about the market, you understand? And the and we can say that at least to some extent, we've had like a great amount of success in the whole thing and all of that. And I believe that many of the people that has been trained have added knowledge about the way the market works and all of that, at least the basic aspects. So now, to be frank, I wouldn't lie that out of most of the people that actually participated in the class, many were actually interested in, furthering their knowledge, gaining independence, out trading and all of that. But the problem, or where the problem was the fact that many couldn't afford it financially, you understand? So, which was why, we came up with this idea that, okay, if there's a way we can at least bring more persons on board to at least, bridge the gap between, all of this, so that even if you are not taking classes or anything now, you can at least like have a feel of how making money in the market really is, you understand? Now, in the training, I taught you guys, or I've taught you guys this thing, 3 markets, which is the crypto, the forex, and then the indices. You understand? Those were the 3 markets we discussed in previous training, or the basic training and all of that. Now, the forex market, fine, it's a good market to trade with, but I'm not going to lie to you that you need enough capital to trade the forex market. You understand? I'm not going to lie to you that you actually need enough capital to trade the forex market. Then the crypto market will have been good too for now, like trading futures or spot and all now. But due to the present situation of the market, you understand, the crypto market, so it is not feasible now, like opportunities are not feasible right now. So which was why we settled for indices. Now, the reason for indices is that indices allows for, ordinarily, it allows for like a leverage of like times 1,000. So which means that what happened with your, let's say for instance, those of you that funded like $30 now, you can actually open a position worth like 30,000. You understand? That is leverage of 1,000. It means that you can trade 1,000 times of your account. Like you can open position about 1,000 times of your account. If you should go to your forex now, unless you're using the fixed leverage, most brokers use is times 100, 100x leverage. So, but that is, you can just trade 100 times of your account size. So you see that, okay, maybe when you open a trade now with a particular lot size, you notice that you can open another position. You understand? You notice that I can open another position again. And then I wonder that what is happening. But indices, even with $0.5, you can open a trade on indices. You understand? What would that do for you? $0.5 times 1,000. It means that what? You'll be able to open a position of like times 500. You understand? Times 500, because 0.5 times 1,000, that is 500. You understand? So it really permits a whole lot of that. But as risk management is important in every other market, it is also important that you take note of all of this. You understand? You also you take note of all of this. You understand? So now I'm going to be showing you guys how the whole thing is going to be like. You understand? So, but the first thing first is that we choose quality over quantity. You understand? We choose quality over what? Over quantity. You understand? the new guys on the block that have not really had the knowledge about how the whole indices, pips calculation and all of that works should not bother, like just listen, you understand? Now, we choose quality over quantity, you understand? Now, let me show you guys something. Let me show you guys something. Now, look at this now. This is in 48 hours. This is VIX 100. You understand? This is in 48 hours. This is like 4,044 points. Indices is calculated in points. You understand? You have to convert it to pips. You can't trade in points. Now, 4,044 points. How do you convert it to pips? You have to divide it by 10. You understand? You have to divide it by 10. So 4,044 divided by 10, that's like 404 pips. You understand? Now on indices, the least lot size you can use is what? Is 0.2. 0.2 pips calculation. Okay, I'm going to talk about pips calculation too. Now, usually 0.2 pip, 0.2 lot size is equals to $2 per pip. And if you're having 400 pips here now, it means that what, on your 0.2 pip trade, on the least lot size, you'll be making like $800 on this trade in 2 days. It doesn't matter your account size. So far, you can get a good entry, even if it is $1 you have in your account. So far, you get a good entry and price doesn't go back to where you made the entry from. You make $800. The same money someone with $1,000 that use 0.2 lot size is making is the same money someone with $1 that opened the trade to will be making. You understand now? Imagine now having something like this, even if it is just once in a week. You understand? Even if it is just once in a week, you know that you traded for 2 days and then you are good. The next thing you want to do is that, okay, you're looking for the next quality trade because this is a trade for 2 days. You understand? In the forex market, except if you are trading gold or CFD indices like what is US 30, this thing, NAS 100 and the likes like that, which is calculated in 0.2. You may not get 400 pips, or you're trading gold. You may not get 400 pips in a week, except you're trading maybe the volatile pairs like GBP, JPY, and the likes like that. You understand? So, this now, imagine now trading this in 2 days, and you've made $800 already on the least lot size. You understand? You now have probably like $830 in your account already. What else are you doing? If you've been trading, maybe you are trading daily or something, and then this thing, you're trading daily, and you know you have to look for setups every day, look for this, that, deal with the news. There's no news in this one too. You understand? There's no news. Like there's no news affecting the indices market. You just trade it. You understand? You just trade the indices market. There's no form of news affecting it at all. You understand? So it is just pure price action. So basically what I do on indices is to swing trade. You understand? Like, you know, in a day or to look at how sweet the chart is. You understand? Look at how sweet it is. You understand? Just a drop in a day. You understand? Just a drop in a day is, you know, really significant and can fetch you a whole lot. You understand now? Now let me move to VIX 75 now. I'm coming up. All right, so this is VIX 75. This is VIX 75. And okay, there's something for you guys to note. Now, how fast all of this moves. You understand? It's important to note that out of the VIX or the VIXs, the most volatile is VIX 100, very, very volatile, followed by VIX 75, followed by VIX 50, followed by VIX 25, 1x, and the likes, VIX 25, VIX 10, and the likes like that. For the 1x, VIX 300 1x, VIX 200 1x, VIX 100 1x, VIX 75 1x, VIX 50 1x, VIX 25 1x. You understand? What do I mean by that? Look at so Just the way the ratings, the way it is dropping, you understand now. For instance, now for the 1x and 1x's or 1x, the 300 1x volatile, most volatile, the 200 1x, VIX 100 1x, VIX 75 1x, the 50 1x, VIX 25 1x, and VIX 10 1x. For the normal VIX volatility, you understand? The most volatile is VIX 100, followed by VIX 75, followed by VIX 50, followed by VIX 25, followed by VIX 10. You understand, like that? So that is how it works. Now, I asked every one of you to at least look for at least like $30 to trade this stuff. You understand? Now, this is a suggestion, and I expect, although I'm going to send you guys the pattern to follow. You understand? The pattern to follow. Now, one thing to note is that don't say because of, okay, the trades usually go well. Okay, the first thing to note is that losses are a part of the game. You understand? Now, don't say because, fine, the trade is to go well, maybe 8 out of 10 is to go well. You're not like, okay, maybe I dropped one today, you profit from it. You used a good loss. Let's say you used the little loss, you made $800. Or you made maybe like 200, even if it's just $200. So you're not like, man, let me make more or something. You now increase your risk. And then maybe due to the fact that you cannot even hold because the higher your lot size, the higher your loss or your risk. Sometimes you might have a trade and then the trade doesn't just go like start from blue like that. It may just go at maybe -$2, -$3 at first, and then it changes to blue later. But let's say out of $800, you've already risked a whole lot, and it's now showing maybe -$200, and you're like, should I close it? You close it. Maybe it's not start moving. Maybe it's not start moving up again. You buy again, start coming down again. So all these things you have to avoid. That is why you have to pre-calculate your risk at first. There will be instances where you don't have choice than to use that least lot size. VIX 100 now, the least lot size you can use is 0.2. You don't have any other option than to use $0.2 and 0.2 lot size. You understand? You don't have any other option than to use it. Now, personally, even myself, I still risk little to make more. You understand now? This thing now, the VIX 100 now, I was able to catch like about like 2,500 points or thereabout. I think I started trading from 25,192 or so. So let's see. I'm coming now. Like 25,192. Where is it? Okay, that's like coming. So 25,192 until where? Okay, who is raising out? Use the chat box, please. 25,192, that was like 2,000, about 2,500 pips. You understand? My initial lot size was 0.5. You understand? After some time, I removed out of it. I removed 0.2 out of it. You understand? So I'm running like 0.3 lot size now. You understand? I'm running like 0.3 lot size now. It is your account size. As you are trading gradually, always use the least lot size. The least lot size. I'm going to show you guys a template. For instance, now, each of them have the least lot size to use. You understand now? You have the indices pip calculation videos. Many of you, if you don't understand what I'm trying to say, go back. It is real money you're risking. I'm coming up. Yeah, the meeting is recorded. So it is real money you're risking. You understand? You need to understand all of. Don't just because of Savi is using 0.05 lot size, you want to use it too. Can your account hold it? You understand? Can your account hold it? It is fine. It is sweet to make money immediately, but can your account hold it? For instance, if it is trying to pull back or something, yes, you can get it afterwards. So doesn't mean that okay, if it is pulling back or something, you will not be able to, you'll not be able to breathe. Imagine trading and then you don't have peace of mind. Like, hey, it is already going. Oh, hey, what's going to happen like this? You understand? So you need to use the least lot size. You will get to where you are going to. There is no need for you to stretch yourself. There's no need for you to, you get where you are going to. Now, personally, in this thing for now, for instance, now, there was a time I sent, I don't know if I sent it to all the groups, but there was a time I sent forex calculator, like compounding calculator. You understand? And like, for instance, now 3% on a daily basis will give you like 140% in a month on your account. You understand? It will give you 140% in a month on your account. Now, for instance, now, if while we start this stuff, you understand, you are able to, we see a trade like this VIX 100 of 2 days now. You understand? There will be opportunities. So avoid there will be a time where there will be small wins, big wins, small losses, and then what? The one we don't want is big losses. Avoid that one. You understand now? There will be instances where there will be opportunity like this VIX 100 trade. You understand? There will be opportunity where there will be like this VIX 100 trade where, with the least lot size, you'll be able to make something. Okay, I think I traded the VIX 75 last week or so. When it started selling, I'm coming. Yeah, I think I traded it. I sold it from somewhere at around this point or so, and I took profit here. That was like how many pips? Look at something. Let's say like around this place here, and then maybe I sold at this point here. That was 192,792 points divided by 10. That's what? 19,792 pips. The least lot size you can use on VIX, this thing, VIX 75 is 0.001. You understand now? 0.001 times, it will not be 0.01 lot size per pip. 0.01 times 19,792. That's like $197 with the least lot size. You understand? With the least lot size, that's like $197. You understand now? So all these things, there'll be opportunities. You don't need to stress yourself that, okay, you want to force it. There'll be opportunities to, take all these, other options that, okay, will provide you much more opportunity to trade with. Okay, only indices. What is it about? No, currency pairs, both. I teach everything. But what I'm trying to say is that the indices permit you much more opportunity to, make that money that you require. You understand? That is what I'm trying to say. You understand? The forex market, the forex market is good too. The crypto market too is good, provided that opportunity. But you don't want to expose yourself to things like that now, due to, especially the crypto market, due to the way it is now, where there'll probably still be a dump, and then afterwards, like an accumulation will start and all of that again, first of all, before maybe another bullish run. You understand? So you don't want to get caught up in the middle of that. And fine, you still have to learn technical analysis. You understand? So indices can permit you opportunity to make from your little, you guys should probably have contacts of people that you trade indices, and then with maybe like $1 or so, they make like maybe like $200 on a trade. I don't think you can see that on forex, because even the spread alone will take you out. It will take you out, like throw you off. You understand? So all these things is what you should take note of. That, okay, you are here to stay in long term. You understand that you don't want to risk too much or something. You understand? So now let me give a case study now, for instance now. So let me give a case study based on this VIX 100 trade. Let me share you guys something now. So let us this thing. I'm coming. Let me just do like a mock trading for you guys. So let's say this is it now. So I'm coming on. Someone asked how much did I risk on your on VIX 75? Well, I don't even know how to answer that, but don't ask me such question, please. This thing. So for instance, now I told you guys I sold from what? From 25,001 what 192. You understand? I sold from what? From 25,192. So let us try to locate that 25,192. 25,192. 25,192. So let's say this is the point here. Now, personally, some of you, and it is what I advise. You understand? It is what I advise. For those of you that cannot hold, you get now. For those of you that cannot, what do I mean by that? Look at something now. This was 25,192. You know, this was 25,192 at this point here. But when price got to this point here, when price got to this point right here now, look at 24,108. It got to that point there. Let's check how many pips. I'm coming. Let's check how many pips you get. So let's check how many pips like that. So that's 1,071 points. If we should divide it by 10, that's like 107 pips. You understand? That's like 107 pips. You get now. So times 2. You know that in the least loss size you can use on VIX 100 is 0.2. That's what $2 per pip. It will be showing you that you've made $207 already. You understand? It will be showing you that you've made $207 already. Now, if you are okay with that for a day, with small accounts, don't wait for pullback. You understand? Like, don't wait for pullback. If it is this $200 you're able to make, me now, okay, maybe I'm using 0.5 lot size at this point here. Imagine, I'm using 0.5 lot size at this point here. It has done 107 pips. What will I do? I'll remove 0.2 from it. Or maybe 0.3 from it. Maybe it will not be running like, maybe like $170. Sorry. It will be running like 0.3 times on that, like $300 I've removed. I'll leave the remaining 0.2 here. I'll leave the remaining 0.2, and then what happened? I would, this thing, I will just put my stop loss at maybe entry or in profit. You get now? So for a small account, you don't want to trade pullback. You don't want to trade it, like it is just that impulsive move you want to trade. Look at now, when price got to this point here now, what happened? It retraced back. Since it was a sell order that you gave your broker, the Deriv, to trade for you, when it is moving up, buying again, your money will be reducing. Now it moved up by 85, like by 83.7. You understand? Which means that what? Your $200 at this point, it will be minus like minus 167 or so. It will be showing minus 167. That is 200 minus 200 or 214 minus 167. That's like about that's like 47 or so. So your $200 will now be showing $47 here. When in actual sense, you could have just closed at this point here. You understand? Now, something to take note of is that it is not every time that price will just stop at this point. It can go back to your entry, and then it start to sell again. What do I mean by that? It can do something like this now. It can do something like this. Come to this point here. Come to this point here. And then, go back. Go back to your entry where you entered from. You understand? Or maybe where you put your positive stop loss on. So instead of you making 200 and something dollar, you now be making maybe $2 or $3 because of it did not take profit. You understand? Because of it did not take profit. You made $200 from your $30 account. That is like times 6 plus, times 6 of your account on a single trade in 3 hours. This is 3 1 hour candles, and then you're not okay. What else do you want? And maybe you're like, okay, oh, let me wait because of service said that you don't have this thing to take such risk. You don't have this thing. So later, Maybe when you've made that to $230 or something now, maybe you've made $200, you stopped at this point. Of course, I used to tell myself that the first structure point or the first, or maybe the order block or whatever, is the first point you want to take profit, no matter what. So let's say you've closed the trade $200 now, you've closed it. You now have $230 in your account. And then obviously from my own point, I know that price is going to pull back. You get, I know. I'll probably know it because I'm monitoring the trade. I can now give you guys an order that, okay, resell. What do you want to do again? You want to resell it with the least lot size. Where would your next take profit be? Your next take profit will be at this point here. It will be at this next point here, this point here. You don't need to wait for price to come to take profit. So far, you've made more, like, okay, now let's say you sold from somewhere around here now. It has now done like, this is like 2,180 or 2,155 pips and points divided by 10. That's what 215. 215 times 2, that's not $400 like that. So with just your little money, you'll be able to make 600 USD just by what? By focusing. You have the notion that, okay, on this trade, maybe it is just this $200 that I want to make, that I might make, but it is still better than making nothing due to the fact that you not take profit. You're like, oh, whatever service says is sure or something. No, I don't control the market. As prices, there's always a pullback. Once there's a break of structure or there's a break or something, I don't know how I can describe that to you guys. There's always a pullback afterwards. You understand? You don't want to trade. You don't want to get caught up in the middle of this pullback. This same thing here too. Let's say buy at this point here. You now bought. Where do you want to take profit? You want to take profit at this point here. This point here is where you want to take profit, your first profit. At this, let's say you bought at somewhere around here. You bought at somewhere around here. You want to take your first profit at this point here. You don't want to wait for, because of maybe I said, okay, take profit. The trade is going to, this is where it's going to get to. You understand now? You don't want all of that. You don't want to go through the stress of when price is now coming down, you're not closing, you're not panicking. You understand? You're not panicking. So look at something now. Look at this one now. Look at this now. From this point here to this point is 1,490 pips. You understand? Divided by 10 to convert to pips, that's 149. 149 times 2. That's like $300 or so. On the trade, you make $300, but because of I said that you should get here, you want to use your $30 to make $800 in a day or something. It will not always work like that. Build the account first. By the time you build the account to some extent, you'll be able to increase your lot size, and even if it is just this one that you get, your lot size helps you. You understand now? You don't have to wait for it to get to take profit or to the extreme, because all this pullback, your mind may not be able to withstand it. Imagine now, from that 1,490, it dropped to like, sorry, let me check how many pips now. I'm coming on. It dropped to like about 1,281 minus 1,490. 1,490 minus 1,281. That was like about maybe like 190 or so. You get divided by 10. So it's now be showing from 280 something, a bit from $300. It is now going to be showing $38. Imagine what you lost because you did not take profit. And then you're like, then this thing is coming to my entry. You understand? Maybe you moved your stop loss to this point here, and it's now coming back down. You're like, hey, what should I do? Should I close it? Blah blah blah, and all of that. No, you don't have to wait for price to come to where I said you should buy. There will always be opportunity to what? To rebuy or resell. So it is the profit from the profit you've made you want to use to re-enter for possible. But the next point, let's say you buy at this point again. What do you want to do? You want to take profit at this point too. You can see that the way it is getting to all these resistance points, all these points where there was previous price were like, how will I say, like a structure point previously. There is always a pullback once you get to all those points. So from this point here to you just want to take profit at this point too. You don't want to trade the pullback because Your account may not permit, and then psychologically too, you may not be able to. So this one too is now another 1,576 points divided by 10. That's 157 times 2. That's like another what? Another 400, 300 and something, $300 and something again. You understand now? On this particular trade, there may, if it was that you didn't take profit now, there may be instances that this one will come back to your entry before it buys. You understand? So you have to take profit. You have to take profit. If you are using the least lot size, close it. There will be opportunity to enter the trade again. You understand now? Look at, there will be opportunity to enter the trade again. If, for instance, now, after this one now, you've done maybe like $500 with your $30 or something. Even if it is $100, close it, leave it, and what? Move, see what wants to happen again. You don't need to be forcing it. If you are forcing it, it will be causing all these unnecessary loss. Personally, me, I swing trade, but you don't have to what in swing trade. Look at it with your account size. I was able to make $200, $300 in a month for my $30, or maybe I was able to make maybe $200 in a month for my $30. That is like times 5 or 6 of your account in a month. That's like using like 15,000. That was like using like 15,000 to make like, sorry, $30 is not 15,000. That's like using like 20,000 to make like about maybe like 150,000 or more. What business will provide you that? So all those things you have to what? You have to take note of them. You don't want to get caught up in the middle of all this this thing. Okay, all this. For instance, now this one, now let's say you bought here at this point here. This is where you want to take profit, first profit, no matter what. You don't take first profit at that point today. You don't want any pullback that will not be doing that. Hey, maybe this hour now you check out your money is maybe running like maybe $100 or maybe $20 or $50. You not check later because of you not take profit. Now showing like maybe like $5 and now like let me just close, yeah. Because of you did not take profit. Because of I said that okay, take profit is at 20 something thousand. You understand? You are not like, oh, I'm going to wait. It may be that okay, you are not online, but the time you now check online, you're not like, my money is showing from maybe $100, showing maybe $10 or so. Let me just close it. When in actual sense, you had the opportunity to close at what? At $100, you did not close. You did not close, or maybe you had the opportunity to close at $200, you did not close. What else do you want? You need to remove greed from it. For now, you have to be conservative. Though you don't need to be like, oh, let me just this thing. Let me wait too. Wait, why? Why should you wait? So please, all these things is what you should take note of. I'm going to send. Oh, damn. Sorry. Oh, I didn't know since. So, well, I said that it is quality over quantity. That it is just, like how would I say? It is just like maybe 3-4 setups sending in a week, or maybe 5 or something. But it is quality over quantity. These are the kind of setups you need to boost your account. You understand? Not scalping. If you are scalping, fine. It is scalping requires you having adept technical analysis knowledge. You understand? So, but for now, I won't advise that. I'll try as much as possible to provide you guys the best entry possible, so that with your small account, you can at least build to a reasonable sum. You understand? So, well, that is that about that. I feel like I've done this thing. So another thing is probably during the